talk about one particular sector which is not in the best of health. I'm talking about the microfinance sector. We've seen problems emerging in a listed entity. Generally, the chatter around how stress is increasing for MFIs has taken center stage as well. I mean, just to cite some data, I mean, if you look at over the last 1 year or so, MFI AUM has gone up, I think, about 22, 23%, but the number of customers has grown only about 5% or so. So that kind of tells you maybe more loans to the same customer, etc. Viral Shah is with us, Vice President at IIFL Securities. He's joining in. Viral, good morning. Great to have you with us here on the program. Thanks for joining us. Out of this entire financial space, is MFI the weak link? And what's really happening? What are the underlying sort of reasons for this, and how are stocks poised in your coverage universe?
So I think MFI is one piece of the asset quality stress that is manifesting in the, I would say, entire gamut of lending space. Apart from that, there are other pockets of unsecured loans, predominantly, be it a small ticket personal loan or the credit card loans, where the stress is coming up. And of course, the MFI sector is where, as you pointed out, the stress is coming out to the fore now. And the primary reason for that, to our mind, is because first of all, the over leveraging has happened in, I would say, not just certain pockets, but it is now quite visible across the different states. Typically, if you look at historically, MFI problems used to be like the problem in a particular state for XYZ reason. Now we are seeing this stress spread out probably across all of the states. So, for instance, the lenders in the recent con calls have called out 10 different states. Different lenders have called out different states depending on their exposures. So, I think, to my mind, this is a pretty much industry-wide phenomena.
Okay, and lots of listed entities here. Where are we in terms of recognition of some of this stress? So this is only going to start to show up now over the next couple of quarters.
So we have started to see the glimpse of it in the June quarter. In fact, while a lot of lenders have attributed this to the elections or the heat waves, we believe that may not be the right reason, because some of those delinquencies could not have slipped into a 90 plus bucket in the June quarter for some of these reasons that are being called out. That is point one. So I think we are starting to see the recognition of that stress beginning June quarter. We believe that it has not yet peaked out, and we see this further increasing. The reason is being primarily, if you look at growth right now, incrementally, all the MFIs are pulling back in terms of growth. And when they do that in an MFI space, it has actually a compounding effect. So basically, the borrowers are not able to, say, borrow from multiple lenders, and then typically that's how the over leveraging works. So there has to be an unwind of that, and because of that, I think we'll see further stress increasing. In fact, in the June quarter, the early delinquency numbers that some of the lenders reported also saw increase in the June quarter as well as in the June and July months. So I think this is further going to increase in the next couple of quarters.
Okay, all right. Hi, Viral. Good morning and good to see you. When Nigel on this side. Well, overnight we had the long-awaited Bajaj Housing IPO pricing that was announced. I understand that it's in your restricted coverage universe. But if you could help us out with how do you approach the housing finance theme? Some of those stocks have already seen a big run, something like a PNB Housing Finance in the last month or so. So given that this IPO is being priced at quite an elevated number, I think 3 times price to book, how do you approach the housing finance theme?
So I think there are a couple of, I would say, perspectives here. One, right now, as I mentioned in the beginning, we are seeing a lot of stress, especially in the unsecured segments, right? So from that perspective, the secured products and the secured segments, I would say, are relatively well placed to navigate this, I would say, challenging asset quality environment. On the second aspect, if you look at the two large subsegments of secured lending, one would be a housing and the second would be a vehicle financing, right? I would say on the vehicle financing side, there is also a challenge on growth. All the OEMs have, of course, cut back on their growth guidances from versus what it was 3-6 months back, and we are seeing a slowdown over there. Whereas housing, from that perspective, stands out. where you have a secured product, probably not much asset quality problems, and also well poised in terms of growth. So I think from that perspective, housing finance sector would be well placed.
Speaking of housing finance, Viral, we were going through one of your earlier notes where you were looking at the impact of PMAY 2.0. And I think that note describes that this is actually not very advantageous or very beneficial for borrowers as much as what PMAY 1 was. Just expand on that point and more from the listed housing finance universe. I don't even know if Bajaj Housing, for instance, will have any benefit because they might be catering to a very different sort of a clientele. But from the listed housing finance company universe, what does PMAY really mean? And which are the housing finance stocks that you're optimistic on?
So, if I look at it, yes, the PMAY scheme, I would say it is positive but incrementally neutral. The reason why I say this is that, first of all, if you look at the contours of the scheme, out of all the schemes, the key scheme that benefits the mortgage lenders or the housing finance companies is the interest subsidy scheme. Erstwhile, it was called the CLSS scheme, now the ISS scheme. The contours of this ISS scheme is actually a bit diluted version of this erstwhile scheme. You have a lower subsidy quantum being given. The eligibility criteria at the upper end for the middle income group has been brought down from 18 lakh rupees to 9 lakh rupees of household incomes, as well as the size of the house that are eligible have been replaced with the value of a house. What all of this means is that incrementally it's not as I would say beneficial from a borrower as well as from a lender perspective. Definitely it is positive versus not having it, but relative to what some of the stocks were anticipating in terms of the price movement that we saw probably 2 months back, we have already seen some of that, I would say, kind of fizzle out a bit. So from that perspective, I would say it was a bit incrementally neutral. Otherwise, yes, it is definitely beneficial then rather than not having it.
Okay, so let me ask you a very simple question from a viewer perspective. We'll soon be looking at two IPOs, right? There's going to be Bajaj Finance, Bajaj Housing on one side, and there's going to be Belstar MFI, which finally sees the light of day. They've got the approval for the IPO process as well. So next couple of weeks, we'll have this MFI listing. The MFI space is clouded by a lot of concerns that you described. So between these two IPOs, you know, what do you think which one will have a better run and sort of better acknowledgement from investors, perhaps?
I would say probably, as I highlighted, the preference for the secured products and within that the housing space. So I would be probably recommending that the housing space seems to be well placed rather than an MFI space. And from that perspective, yes, of course, all these incremental schemes of the government also aids, but of course, depending on individual stocks, where they are, whether you are an affordable housing finance company or a prime housing finance company, it will be differing according to that. But amongst the two choices that you mentioned, it would be the housing finance space.
All right, Viral, thank you very much for joining us. Good getting that perspective from you. You know,